Morning, Steve here in Chicago with the morning grain comments. We have a mixed trade overnight. Corn still trading the hangover from the USDA bearish acreage report. We're down about a couple of cents. I think some people feel that we're close to value, but we still have to trade the fact that the U.S. corn crop this year could be bigger than what market had expected if we have normal weather. On Friday, open interest was up 35,000 contracts in the corn. There was massive buying by end users to make some coverage here at these price levels. So that, and probably the lack of farmers selling as they get into planting, will offer some support. Beans are supported by a couple of things. I think the demand might be improving a little bit globally, but more importantly, we're looking way ahead to 2017 and thinking that what if South America doesn't increase production, China increases demand, then all of a sudden our 440 million bushel carryout is 140 million bushels if China has to come here for the demand. So it provides support to November beans, and we really can't break it until we know exactly what the weather conditions are for this summer. Wheat is still a weather market. The 2-week forecast calls for some rains in the southern plains, which is perfect for the crop, but it's going to be warm and dry before then, so we've got a pretty trading range there. The International Grain Council estimated the world corn crop at 993 million tons. That's up from 972, and most of that is an increase in the U.S. They estimated the bean crop at 320 million tons versus 323 last year, demand going up to 327 from 321. Most of the guesses for our corn carryout for 16-17 is over 2 billion bushels. The bean carryout guess is about 435, and the wheat carryout is close to 1 billion bushels. So again, we have to be cognizant that those are negative numbers unless the weather doesn't change. Headlines, large investors may be betting on a lower U.S. dollar. Barron suggests there's good signs for the U.S. economy. The Iran oil minister said he will continue to increase production versus OPEC's call for some freezing of production. And Wall Street looks for 2 interest rate cuts in 2016, the first one in June. Kind of a sloppy trade, and we'll see what Mother Nature has in store for us for the month of April. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.